Welcome to Infinite Business Dynamics. In global commercial strategy, organizations increasingly operate across borders, markets, and cultures. While companies often invest heavily in market research, financial modeling, and operational planning, many international partnerships still fail. One of the most overlooked reasons is culture. Culture shapes how organizations communicate, negotiate, build trust, make decisions, and resolve conflicts. When cultural dynamics are misunderstood or ignored, even well-designed strategies can struggle during implementation. This session moves from cultural theory to real business decisions in global commercial strategy. We will examine how cultural dynamics shape global partnerships, supply chains, and strategic decisions, and how organizations can incorporate cultural understanding into practical commercial strategy. To approach this systematically, we use a structured roadmap for analyzing culture in global commercial strategy. This roadmap examines culture through 6 complementary lenses. We begin with national culture, using Hofstede's Cultural Dimensions. This framework helps explain how societies differ in attitudes toward hierarchy, individualism, uncertainty, and long-term orientation. These differences influence negotiation styles, leadership expectations, and trust formation. The second lens focuses on market distance through the CAGE framework. This model highlights how cultural, administrative, geographic, and economic differences shape the complexity of operating across international markets. Next, we move inside organizations through the cultural web. This framework helps identify how stories, symbols, power structures, rituals, and control systems form the dominant organizational paradigm. We then examine organizational culture types using the competing values framework. This model distinguishes between clan, adhocracy, market, and hierarchy cultures, helping explain how organizations prioritize collaboration, innovation, competition, or control. The fifth lens explores deep cultural drivers through Schein's model of organizational culture. This framework distinguishes between visible artifacts, stated values, and the underlying assumptions that truly guide behavior. Finally, these insights converge in the strategic compatibility matrix. This tool evaluates how cultural fit and strategic fit together influence the success of partnerships and alliances. Throughout this discussion, we will also refer to a practical case context involving Western companies working with manufacturing partners in Bangladesh. This example will help illustrate how cultural differences influence real-world global sourcing relationships. Together, these 6 lenses provide a comprehensive roadmap for analyzing culture in global commercial strategy.
Ever stop to think about the story behind the t-shirt you're wearing? It's not just cotton and stitching, right? It's this huge, complex, global dance of partnerships, logistics, and most importantly, culture. Today, we're going to peel back the layers on the hidden cultural forces that really power the global fashion industry. It's a fascinating story about what it really takes to get that tag on your shirt. Let's dive in.
So what really connects a bustling London high street to a factory in Dhaka? Yeah, sure, on paper it's a supply chain, but that's just the boring answer. The real connection, the invisible thread holding the whole thing together, it's all about culture. It's like a bridge of understanding built between 2 completely different worlds. So the real question is, how do you make sure that bridge doesn't just crumble?
On one side, you've got these absolute giants, right? Think Nike, H&M, Marks & Spencer. They need massive volumes of clothing, and they need it cheap. Then on the other side, you've got these incredible Bangladeshi manufacturers. I mean, these guys are the engine room of the entire fashion industry. Now, here's the thing. They both want the same goal, a successful, profitable business partnership. But the path to get there, well, it cuts through 2 completely different cultural worlds.
All right, so to really get our heads around this, we've got to peel back the layers of this cultural onion. And we're going to start with the very first and maybe the biggest layer, just the straight-up national differences between the places where the buyers and the suppliers live and work.
And to help us do that, we're going to use this really cool tool called Hofstede's Cultural Dimensions. Now, stick with me here. It's basically like a set of X-ray glasses for culture. It helps us see past all the surface-level stuff and get right to the core values that make people tick differently, especially when it comes to business.
Okay, so take a look at this. The differences are, well, they're huge. In the US or the UK, you get what's called low power distance. Think flatter companies, more open door policies. But in Bangladesh, it's high power distance. Hierarchy is key. The boss is the boss, and decisions come from the top down. And then there's individualism. In the West, it's all about the contract. What's written down on paper is what matters. But in Bangladesh, business is way more about the collective. The relationship is the contract. It's about building trust, sometimes over years. You can already see how easily things could go wrong, right?
So what's the big takeaway here? This isn't just some academic theory. This stuff has huge real-world consequences. If you're that buyer from H&M, you can't just send a junior manager to Bangladesh to sign a deal. It's just not going to work. You have to engage with the top dogs, the senior leaders. You've got to put in the time to build real trust. And you need super detailed, crystal clear systems so that everyone's on the same page.
Okay, so Hofstede's model gives us the why behind the differences. Now let's look at another framework. This one's called CAGE, and it helps us measure just how far apart these two worlds really are. And trust me, we're not just talking about physical distance here. So CAGE is an acronym. It stands for cultural, administrative, geographic, and economic. The cultural part, we've talked about that, different ways of communicating. Administrative, that's the jungle of different laws and labor codes. Geographic is, well, it's the obvious one, the sheer physical distance. And economic is all about the massive gaps in income and labor costs. The real trick for a global brand isn't just knowing these gaps exist. It's about having a smart strategy to close every single one of them.
All right, so that's the big picture national level stuff. But let's zoom in now. Let's peel back that next layer of the onion. What's actually happening inside the factory gates? What does the company culture feel like on a Tuesday afternoon?
You know, a lot of Western companies run on what you'd call a market culture. They are absolutely obsessed with performance, beating the competition, hitting those quarterly numbers. It's all speed, results, bottom line. But many of the Bangladeshi manufacturers, they're different. They've got this blend of a hierarchy culture, very structured, and a clan culture, which is all about loyalty, tradition, and thinking long-term. You can almost feel those two models grinding against each other, can't you?
And right there, that's the core of the problem. You've got a buyer who only cares about this quarter's results, meeting a supplier who's thinking in terms of a decades-long relationship. And look, neither one is wrong. They just have totally different priorities. The only way this works is if you find a way to bridge that gap. You need a system that gets the results but is built on a real, solid relationship.
So how do we actually get inside the supplier's head? Well, there's another great tool for this. It's called the Cultural Web. And what it does is it helps you ignore the slick corporate mission statement on the website and instead figure out what the culture actually is. You know, the stuff that happens day in, day out.
And when you use it here, you find some fascinating things. The stories people tell are these epic tales of resilience, of pulling off a massive order against an impossible deadline. The symbols that really matter, they're those international safety certificates framed on the office wall. That's their badge of honor. Power, it's all at the top, usually with the family that owns the business. And the daily rituals? It's this constant obsessive tracking of production numbers, costs, and speed. See, this isn't just a factory. It's its own little world, with its own complex culture. And that's the world the buyer has to navigate.
Okay, so we've peeled back the national layer and the company layer. Now we get to the very center of the onion, the core. These are the deep, unspoken beliefs that drive absolutely everything.
And the best way to think about this is Schein's cultural iceberg. It's a simple idea, but it's so powerful. You know how an iceberg works, right? You only see the tiny tip sticking out of the water. The real mass, the part that can sink a ship, is all hidden underneath. Culture is exactly like that. So at the very top, sticking out of the water, you have the artifacts. This is all the stuff you can actually see and touch when you visit. It's the shiny new factory, the high-tech machinery, those framed certificates on the wall, the perfect audit reports. It's all the visible stuff that screams, we know what we're doing.
Just below that, right at the waterline, are the espoused values. This is what the company says it believes. It's the official PR story. Think of all the mission statements on their website about sustainability, ethics, social responsibility. All important stuff, for sure, but it's not the full picture.
Because deep, deep underwater, that's where the real power is. That's the underlying assumption. And for these manufacturers, it comes down to one incredibly powerful belief. Our survival depends on keeping these big global buyers happy for the long haul. That's it. That one thought drives every single decision. It's not just about making money this year, it's literally about survival.
So okay, we've peeled the onion, we've seen what's under the water with the iceberg. Once you get all that, the national culture, the company culture, and those core beliefs, what do you do with it? How do you use that knowledge to build something more than just a simple buyer-seller relationship? Well, the smartest companies, the ones who really get it, they follow a kind of four-step playbook. They don't just send in an order and hope for the best. No, they actually invest in making their suppliers better. They don't just demand safety compliance, they help fund those safety programs. They don't just blindly trust, they build systems so everyone can see what's going on. It all adds up to one thing: turning a simple transaction into a real partnership.
And that really brings us to the heart of it all. This whole culture thing. It's not some fuzzy, soft skill that you leave to the HR team. It's a hardcore business strategy. Because when you can combine that deep cultural understanding with top-notch operations, you don't just get a good supplier. You get a supply chain that can weather any storm. And that is a competitive advantage that is almost impossible for your competitors to copy.
Next 4 parts: the global supply chain, global commerce and culture, the culture code, and the architecture of cultural strategy. From theory to execution, each explore a different dimension of global commerce and culture.
All right, let's pull back the curtain on the global supply chain. We're going to dive deep using a real-world case study to see how culture is really the invisible thread holding the entire world of international commerce together. Go ahead, take a look at the jeans or the shirt you're wearing right now. There's a very good chance it started its life over 7,000 miles away in a place like Bangladesh, which is a massive hub for apparel manufacturing. But here's the thing, that journey isn't just about container ships and airplanes. It's really about navigating a super complex web of human culture. And that really gets us to the big question, right? How on earth do huge global brands, think H&M or Gap, manage these massive cultural and economic divides to work with partners halfway around the globe? It's a seriously complex strategic puzzle. So to even begin to solve that puzzle, we've got to understand why Bangladesh is such a huge piece of it in the first place. I mean, it didn't become a manufacturing powerhouse by accident. There are very, very specific reasons that pull the world's biggest brands there. It's really this trifecta of factors that creates the perfect conditions. And look, it's so easy to just say, oh, it's cheap labor. But that's not the whole story, not even close. It's about having the sheer capacity to handle enormous orders, all supported by this amazing local ecosystem of suppliers and logistics. That's the real magic that makes Bangladesh so vital to the industry. Okay, so we know why the brands are there. Now let's zoom way out and get into the how they operate. And that is all about culture. We're going to use a tool called Hofstede's framework. You can think of it as a cheat sheet for understanding the unwritten rules of a society and seeing how they stack up against another. First up is this concept called power distance. It's basically a fancy term for a simple idea: who's in charge and how much. In Bangladesh, power distance is high. That means decisions flow from the top down. The boss's approval is everything. Now, contrast that with the US or the UK, where you have much flatter organizations and teams are often empowered to make their own calls. So what? What does this actually mean for business? Well, it means if you're a buyer from a Western company, you can't just send a mid-level manager to seal the deal. No way. It won't work. You absolutely have to get FaceTime with the senior leadership. Getting that one piece right is the first major key to a successful partnership. Next up is this clash between collectivism and individualism. In the West, business culture is fiercely individualistic. The contract is king, and it's all about the specific transaction. But in a more collectivist culture like Bangladesh is, business is personal. It is built on trust, on loyalty, and on relationships that you build over a long, long time. And this demands a completely different strategy. You can't just fly in, wave a contract around, and expect everything to go smoothly. It's a recipe for disaster. You have to invest the time, put in the face-to-face work, and build genuine relationships. In that part of the world, trust is the real currency. All right, let's peel back another layer here. We've looked at the big picture national culture. Now let's get a bit more granular and talk about the practical distance between these two markets using another tool, the CAGE framework. The CAGE framework is this really clever way of thinking about distance. See, it's not just about the miles on a map. It helps us measure the gap between countries across 4 really important dimensions. And when you apply this to our case study, wow, the distances are just massive. You have cultural distance in how people communicate. You have administrative distance in laws and red tape. The geographic distance is obvious. It's a long way to ship things. And the economic distance in terms of income and infrastructure is huge. Every single one of these is a major hurdle. So how do you bridge these huge gaps? The answer is pretty straightforward. You invest. You invest heavily. Smart companies pour resources into training their suppliers, into building up their capabilities, and into putting rock-solid compliance systems in place so that everybody is playing by the same rules. Okay, we've done the 30,000-foot view, we've done the market-to-market view. Now let's zoom all the way in. We're going right inside the factory walls to understand the unique culture there, the invisible forces that shape what happens every single day. And what you find inside a typical factory is this really powerful cultural web. It's built on the stories people tell, stories about hitting impossible deadlines. It's reinforced by symbols they're proud of, like international certifications. And the whole thing is held together by clear power structures and daily rituals, like production meetings, that keep the entire machine humming. To get even deeper, think of the factory's culture like an iceberg. On the surface, the part you can see are the artifacts, the modern equipment, the safety audits. Just below the water are the espoused values, what the company says it believes in. But the real power, the massive part of the iceberg you don't see, is at the very bottom, the underlying assumptions. And here, it's the core belief that their very survival depends on maintaining these global partnerships. All right. Wow, we have looked at this from every possible angle, from the national level, down to the market, right down to the factory floor. So now what? What's the point? How do we connect all these dots and turn all this understanding into an actual winning strategy? Well, it all starts with recognizing the strategic fit. This is not a one-way street. The Bangladeshi manufacturers bring incredible production power and efficiency to the table. And the Western retailers? They bring design, branding, and of course, access to a global market. It's a truly symbiotic relationship. And this is what that partnership looks like in the real world. The successful companies don't just place an order and walk away. They actively invest in their suppliers' skills. They introduce new tech for transparency. They support safety initiatives. And most importantly, they commit to building real, long-term, collaborative partnerships. And the payoff for all that hard work is huge. The entire relationship transforms. It stops being just a simple transactional thing, buying and selling, and it becomes a deep, strategic collaboration where both sides are genuinely invested in making the other successful. And this quote just nails the key takeaway of this whole explainer. True success in the global economy isn't just about being good at logistics, it's about combining that operational muscle with deep cultural intelligence. That right there is the secret sauce to building a supply chain that's resilient enough to last. So I'll just leave you with this one final thought to chew on. In a world that is getting more and more connected every single day, maybe understanding culture isn't just a soft skill anymore. Maybe, just maybe, it's become the most critical factor for success. Maybe it's the new bottom line. Have you ever stopped to think about what's really behind the products you use every single day? It's a story that goes so much deeper than just cargo ships and logistics. Today, we're going to deconstruct the culture code of global business. Okay, let's make this real. Think about the t-shirt you might have on right now. Don't worry about the brand or the color, just think about its journey. Seems like a simple question, right? But the answer is incredibly complex and honestly fascinating. You see, making that t-shirt is like putting together a giant global puzzle. And right at the center of that puzzle is the relationship between Western buyers and huge manufacturing centers like Bangladesh. And that relationship, as we're about to find out, either succeeds or fails based on one thing, a really deep understanding of culture. So, how are we going to solve this puzzle? Well, we're going to peel it back, layer by layer, kind of like an onion. We'll start with the biggest picture, the national culture. Then we'll zoom in a bit to look at the differences between the markets, and then get really granular, looking at a company's unique DNA. And finally, we'll get to the core and see what a real strategic partnership looks like. All right, first up, that big outer layer, national culture. These are the invisible, deep-down codes and values that really shape how an entire society thinks, how it acts, and especially how it does business. And to get our heads around this, we're going to use a really powerful tool called Hofstede Cultural Dimensions. Just think of it like a set of X-ray glasses that let us see and compare the core values that make different cultures tick. Let's kick things off with a concept called power distance. So in the US and the UK, business structures are usually pretty flat. Authority is kind of spread out. But in Bangladesh, it's a completely different story. The structure is much more hierarchical. All the big decisions flow from the top, and senior leadership is everything. So what's the strategic takeaway for a Western company? It's actually crystal clear.
If you want to get a decision made or a problem solved, you have to go straight to the senior leaders. That's how you make things happen. Now, check this out. The difference between individualism and collectivism. Western business often lives and dies by the contract, right? The deal, individual accountability. But in a collectivist culture like Bangladesh, business is built on something totally different: long-term relationships and deep personal trust. And that right there is a huge takeaway. Real success isn't about having a bulletproof contract. It's about actually investing the time and energy to build genuine, lasting trust. The relationship is the foundation for absolutely everything. And this is our first big clue that a strong supply chain is built by people, not just purchase orders. Okay, let's peel back the next layer. We're moving from those broad societal values to the very real, practical distances that separate the business worlds of, say, the UK and a sourcing partner like Bangladesh. For this part, we'll use something called the CAGE framework. It's a brilliant model because it measures distance not just in miles, but across 4 key areas that create very real challenges for business. So let's break CAGE down. The C is for cultural distance, and this is where those Hofstede dimensions we just talked about have a direct impact on communication. A is for administrative distance. Think different laws, different regulations. G is geographic, just the sheer complexity of the logistics. And E is economic distance, the real disparities in industrial development. Every single one of these adds friction to the system. And this shows you exactly why Western companies can't just send an order and cross their fingers. To build a reliable, resilient partnership, they have to actively invest in developing their suppliers. That means providing training, better systems, and the support needed to close these gaps. All right, it's time to peel back our final and most specific layer. We've looked at how national culture and market distances shape the bigger environment, but those forces don't just exist in the abstract. They actually shape the unique corporate DNA of the companies themselves. So now we're going inside the factory walls. Our tool for this deep dive is called the cultural web. You can think of it as a way to map out all the different pieces, from the stories people tell to the symbols they value, that define what it's really like to work inside that company. It shows us what truly makes an organization tick. Now, for a typical supplier in Bangladesh, this web is incredibly telling. The stories they tell are legends of resilience, of hitting impossible deadlines. The symbols that matter are those international certifications, which signal credibility to the rest of the world. Powers held by decisive senior or even family leaders. And the rituals and control systems, they're all laser-focused on one thing: constantly monitoring efficiency, cost, and on-time delivery. This is their operational heartbeat. Now, to understand the why behind that heartbeat, we can go even deeper with something called Schein's model. You start with the visible stuff, the artifacts, the modern factories, the safety certificates. Then you have the espoused values, what they say is important, like a commitment to ethical sourcing. But the real driver, the core belief, is the underlying assumption, the absolute conviction that their very survival depends on keeping those long-term, stable relationships with their Western buyers. So the critical point here is that a Western buyer has to understand this internal DNA. Your whole strategy, how you communicate, how you monitor progress, how you build a relationship, it has to be aligned with these deep-seated realities. You have to work with them, not against them. So here we are. We've peeled back all the layers: national, market, and organizational. And right here at the core, we find the blueprint. This is what it takes to build a truly successful and, even more importantly, a resilient global partnership. This quote just says it all, doesn't it? It's not enough for a supplier to be good at making things. For a partnership to really thrive through all the ups and downs, there has to be a deep cultural fit. Capability and compatibility, they are 2 sides of the exact same essential coin. And this is how the smartest companies are responding. They're changing their whole mindset from just simple transactions to genuine collaboration. They're investing in developing their suppliers, demanding transparency, supporting safety, and above all, building long-term partnerships that are founded on that cultural understanding we've been talking about. Which brings us to the ultimate insight, the big idea we've been building towards this whole time. In today's volatile global economy, the strongest, most competitive, and most resilient supply chains are not built on cost alone. They are built on a foundation of deep cultural intelligence. And that leaves us with a final thought to chew on. As the world gets more complex and more interconnected, you have to ask, is understanding culture not just a part of a successful global strategy, Or is it maybe the ultimate strategy itself?
Global commerce culture.
Have you ever stopped to think about the t-shirt you're wearing right now? I mean, really think about its journey? Because it is a story that stretches across entire continents. It's this whole complicated dance of economics, logistics, and, this powerful, often invisible force, culture. So today, we're going to trace that journey all the way to Bangladesh, which is a global hub for apparel, to really get a handle on how these hidden cultural dynamics shape the very clothes on our backs. It seems like kind of a weird question, doesn't it? What does culture have to do with price tags? Well, the answer is a whole lot, actually. The way people build trust, how they make decisions, and the way they communicate across borders, all of that directly impacts the efficiency, the reliability, and ultimately, the cost of making the clothes we wear every single day. So this is the fascinating and often unseen world we're going to explore.
All right, so first up, let's set the scene. Our journey really begins in Bangladesh, a country that has pretty strategically positioned itself as the world's t-shirt factory. It's become an absolute powerhouse in global apparel manufacturing. So this slide really gets to the why. Why do all the world's biggest brands, we're talking Nike, H&M, Gap, flock here? Well, it's kind of this perfect storm, a powerful trifecta. First, you've got massive production capability to handle these huge orders. Second, competitive labor costs, which, translate to affordable prices for us. And third, an entire national ecosystem that is just fine-tuned for one thing: exporting textiles. It is the formula for global manufacturing success. But here's where it gets tricky. All of that economic logic, all that industrial efficiency, it all hinges on one very, very human factor: successfully navigating a deep and really complex cultural divide between the Western buyers and their Bangladeshi partners. And if you get this wrong, believe me, the entire supply chain can face some serious, serious challenges. So how does this cultural divide actually play out in the real world? To get that, we need to start at the top, the macro level, and look at the fundamental differences between these national cultures. Okay, first, let's talk about this key concept called power distance. In Bangladesh, as you can see here, organizations are super hierarchical. All the big decisions are centralized, and they go right to the top, to senior leadership. Now, just picture a buyer from the US or the UK who is totally used to a flatter, more decentralized way of doing things. They could literally waste weeks negotiating with a mid-level manager, not even realizing that only the top boss can give the final green light. So the key takeaway here is super clear. If you want to get things done, you have to engage at the highest level. So beyond how decisions get made, there's this huge question of how trust is even built. Western business culture, as you see on the right, is highly individualistic. The contract is everything, right? It's king. And accountability is on the individual. But in a more collectivist culture like Bangladesh, business is at its heart personal. It's all built on long-term relationships, on loyalty, on mutual trust. A contract? That's just the starting point. The real currency, the thing that really matters, is the strength of the partnership. And that's something that needs constant attention. Now, this cage framework is a really brilliant tool because it shows us that culture is just one piece of a much larger puzzle. It helps us see all the distances that separate these markets. We've been focused on the C for cultural, but you also have to deal with A for administrative stuff, like different laws, G for geographic distance and all the logistics that come with it, and E for the massive economic differences. Successfully managing a global supply chain means you've got to navigate all of these distances at the same time. Okay, so we've looked at the big picture of national culture. Now let's zoom in. Let's go inside the factory walls and try to understand the unique culture of a Bangladeshi manufacturing company. To really get what makes a factory tick, we can use this thing called the cultural web. Think of it like a way to decode an organization's DNA. So what are the stories they tell themselves? Well, a lot of times they're these legends of resilience, of hitting absolutely impossible deadlines. What symbols do they show off? Look for those international certifications on the walls. Those are like badges of honor, of credibility. The power structures? They almost always trace back to a single family or a really dominant senior leader. And the daily rituals, like the morning production meetings, they reinforce that hierarchy and the priorities day in and day out. And all of this can lead to a really fundamental clash of values. See, Western buyers, they often operate in what we call a market culture. They are laser-focused on performance, on speed, on results you can measure. Their Bangladeshi partners, though, they frequently have more of a hierarchy or clan culture, which puts a huge premium on structure,
discipline, and above all, loyalty and relationships. You can see right away how a buyer who's demanding things be faster and cheaper might clash with a supplier who prioritizes stability and trust above all else. Okay, now we're going to dive even deeper. We're going beyond what you can see or hear to try and uncover the hidden, the unspoken beliefs that are truly driving every single decision that gets made. The absolute perfect metaphor for understanding this stuff is an iceberg. What we see on the surface, the visible signs of culture, what we call artifacts, that's only a tiny, tiny fraction of what's really going on underneath. So these are the artifacts, the tangible things a Western buyer can actually see and touch. A modern compliant factory, those safety certifications displayed prominently on the wall, a polished sustainability report, these are all designed to send a very clear signal. We are professional, we are credible, we are competent. But, and this is a big but, relying only on what you can see is a huge mistake. To get the full picture, we have to dip just below the surface and listen to the espoused values, what the organization says about itself in public. These are the espoused values. You will hear this exact kind of language in meetings, you'll read it in their corporate brochures. It's their public promise to be a responsible, ethical partner. But the really critical question is this: do these stated values actually line up with what they truly, deeply believe? To answer that, we have to go all the way down to the very base of the iceberg. This is where we find the underlying assumptions. These are the deeply ingrained, unspoken beliefs that are the true engine driving all their behavior. And here it is. This is the whole ballgame, the fundamental underlying assumption. It's not just about making a profit on this month's order. It is about securing stable, long-term partnerships with major global brands. Because that is the absolute key to their survival and their future growth. Once you understand this single belief, it completely changes how you interpret everything they do and say. So, what do we do with all this? What's the big takeaway? How can a company turn this deep cultural understanding into a real-world strategic advantage? Well, let's look at how the most successful companies put these insights into action. The companies that really thrive in this environment, they just get that the game is played differently. As you can see here, they follow a pretty clear roadmap. They don't just place orders. They actually invest in their suppliers' capabilities, helping them get better. They build systems for real transparency, so there are no surprises down the line. They don't just audit for compliance. They actively support safety initiatives. And all of this, it's all built on the foundation of that fourth most critical step, a real commitment to building genuine long-term partnerships, moving beyond a simple transaction to a real collaboration. Ultimately, this is the big strategic shift that separates the good from the great. It's about transforming procurement from just a simple transaction, here's money for t-shirts, into a true strategic collaboration. It's about creating a partnership where both sides are deeply invested in each other's success. That right there is the secret to building a supply chain that isn't just efficient, but is actually resilient. So as we wrap this up, it really leaves us with a big question to chew on. In a world where you can source pretty much anything from anywhere, is this ability to understand and navigate culture, this cultural intelligence, is that the one thing that gives a company the ultimate sustainable edge? It's definitely something to think about next time you pick up a simple t-shirt.
Organizations spend months perfecting global commercial strategies. They calculate market sizes, project revenue streams, and optimize supply chains down to the cent. But upon execution, these mathematically sound plans frequently shatter. During the planning phase, executives rely heavily on tangible metrics. They build their strategies on strong market analysis, competitive cost structures, and advanced operational capability. This diagram shows why those solid foundations break down. Even with excellent analytics and operations, international partnerships collapse under the weight of cultural misalignment. Culture is often dismissed as an abstract concept. In reality, it acts as a hard strategic variable. It dictates how people on the ground actually communicate, interpret authority, and execute daily tasks. Perfect financial projections and supply chain logic mean very little if the human behavioral dynamics of a new market are ignored. Boardrooms frequently treat cultural frameworks as academic theories, better suited for sociology seminars than commercial planning. This graphic illustrates how cultural insight works in practice. It takes theoretical models and refracts them into concrete business decisions, guiding market entry and supplier selection. This insight also shapes partnership governance and negotiation approaches to manage risk. Translating these cultural models into operational steps safeguards capital investments when expanding into foreign markets. This table outlines how cultural risk operates simultaneously across 4 specific levels: national, global, organizational, and behavioral. You cannot measure it with a single metric. This pyramid models cultural architecture. The foundation is national culture, capturing overarching societal values. Resting on it is organizational culture, representing how a specific company operates internally. The top tier, strategic execution, requires aligning a commercial plan with the layers beneath it. When a global partnership experiences friction, leaders must diagnose exactly which tier of this architecture is failing. Hofstede's Cultural Dimensions provide a quantitative tool for measuring macro societal values, utilizing scales like power distance and individualism versus collectivism. The slider for uncertainty avoidance measures a society's comfort with ambiguity, directly altering how local teams approach corporate risk. These national dimensions dictate macro-level business behaviors. They define how trust is formed between new partners and establish the baseline expectations for negotiation styles. Societal norms provide the context, but individual companies develop their own distinct internal environments. The cultural web maps the internal mechanics of a company through orbital nodes like organizational stories, daily rituals, and formal control systems. These disparate elements connect to form the central dominant paradigm, the unspoken consensus on how things are actually done. While Hofstede's dimensions map the broader country, the cultural web dictates how work actually gets approved and executed inside a specific corporate building. To understand the deepest layers of organizational behavior, we use Edgar Schein's iceberg model, shown here. The visible tip highlights the artifacts and espoused values. These espoused values represent the official corporate policies and stated strategies. However, they rarely reflect the reality of how the company actually functions day to day. Actual employee behavior is driven by the massive submerged block you see below the waterline, underlying assumptions. These are deeply held unconscious beliefs that never appear in a strategy document. When a complex global strategy fails during its implementation phase, it almost always crashes into these unseen, deeply rooted underlying assumptions. Evaluating a potential global partner requires measuring them along 2 distinct axes: their technical capability and their cultural alignment with your organization. Here we see the cultural fit matrix. If a partner is highly capable technically but suffers from low cultural alignment, they fall into the bottom right quadrant, resulting in a relationship defined by frequent conflict. This chart illustrates specific differences generating conflict. A jagged crack divides a buyer culture relying on decentralized management from a supplier culture expecting strict hierarchy. Looking at the right-hand column, these conflicting views create massive expectation gaps and severe implementation delays. Raw production capacity cannot compensate for deep, systemic misalignment between partners. We can observe these dynamics in global apparel supply chains, where Western brands routinely source products from manufacturers in emerging markets. This graphic contrasts the 2 environments. Attached to the left building, the buyer organization emphasizes decentralized decision-making, individual accountability, and performance-driven management. On the right building, the supplier environment prioritizes hierarchical leadership, collectivist workforce dynamics, and relationship-oriented business practices. The ultimate test of a supply chain executive is engineering a strategy capable of bridging this exact operational and cultural divide. As we have seen, a single point of cultural friction can trigger an unstoppable cascade of systemic operational failures. This graphic details that cascade. What starts as a simple negotiation breakdown rapidly accelerates into governance conflicts, implementation resistance, and the complete erosion of trust. This outlines the structural responses required to halt the collapse. The first massive steel pillar is relationship management, focused on long-term collaboration. It is supported by 2 adjacent pillars: enforcing operational transparency through shared production data and adopting international compliance leadership for safety standards. Deploying these structural approaches converts fragile transactional sourcing relationships into highly resilient strategic partnerships. This demonstrates that a complete commercial strategy requires integrating multiple disciplines.
The puzzle pieces of market analysis, operational capability, and financial evaluation form the core. But the system remains incomplete until the final piece, cultural intelligence, locks into the formation, ensuring the structure won't fracture. This final diagram shows the three macro forces that must align for global commercial success: market logic, operational capability, and cultural compatibility. Strategy sets the direction, and capability enables the execution. But culture ultimately determines the behavior at that glowing intersection.
Sustainable competitive advantage in a globalized market requires analytical logic to be perfectly married to cultural compatibility.
This blueprint represents the standard, mathematically driven approach to global commercial strategy. You analyze the market, calculate a highly competitive cost structure, and build an advanced operational capability to execute the plan. Yet, even when the math works perfectly on paper, many of these meticulously planned global expansions and supply chains completely collapse in the real world. The breakdown rarely happens in the spreadsheets. These partnerships fracture because of a complete misalignment in the underlying culture between the organizations trying to work together. We have to stop treating culture as a soft human resources topic. In global business, culture is a structural, quantifiable variable that dictates whether a commercial decision succeeds or fails. Having the operational capacity to manufacture 1 million units means nothing if the teams cannot agree on how to govern the process. To prevent a structural collapse, you have to calculate cultural compatibility alongside your financial projections. Recognizing that culture matters is only the first step. The requirement is translating broad cultural theories into concrete frameworks you can apply directly to commercial strategy. When you decide to enter a new geographical market, understanding how a target society views authority and risk tells you whether to build a joint venture or acquire a local competitor outright. It also determines who you source from. Choosing a supplier requires analyzing whether your internal governance systems will actually align with their daily management structures. By systematically mapping these differences, you can predict how a counterpart will behave at the negotiating table. This allows you to build accurate risk models before a single contract is drafted. Systematic cultural insight is the exact mechanism that connects abstract strategic planning to a resilient, functioning global operation. This model illustrates the architecture of global commercial strategy. It operates across 3 distinct, intersecting cultural layers. The foundation is national culture. Here, we use Hofstede's dimensions to map how entire societies approach hierarchy, relationships, and uncertainty. Laterally, the CAGE framework measures the structural distance between international markets. CAGE is an acronym that analyzes how different markets are across cultural, administrative, geographic, and economic lines. Resting on that foundation is organizational culture. Using the cultural web framework, we categorize the internal structures, power dynamics, and daily routines that define how a specific company actually operates. Inside that organization sits the behavioral layer. Schein's model helps expose the deep, unconscious beliefs that drive the decisions of the individuals working there. Finally, strategic execution sits at the apex. It relies entirely on the stability and alignment of the national and organizational layers beneath it. If you build a cross-border supply chain without aligning these foundational layers, the entire structure collapses under the friction of its own operations. This control panel visualizes Hofstede's cultural dimensions. The dials for power distance measure a society's acceptance of hierarchical authority, while other scales track their tolerance for uncertainty or their preference for individual achievement versus collective success. These societal norms dictate practical business outcomes. They shape how local teams expect to be managed, what they consider a successful negotiation, and how they build trust with foreign partners. This node graph represents the cultural web. It divides internal operations into 6 elements: stories, symbols, power structures, organizational structures, control systems, and daily rituals. Together, these 6 elements form an organization's dominant paradigm. They explain how work is actually completed on the ground, which frequently contradicts what the official corporate policies claim. This diagram illustrates Schein's cultural iceberg, mapping the hierarchy of organizational beliefs. Above the water are the artifacts, the visible structures, processes, and behaviors you can easily observe. At the waterline are the espoused values, which are the strategies a company publicly claims to follow.
But deep underwater are the underlying assumptions, the unconscious beliefs that actually generate the visible behaviors at the surface. Because these underlying assumptions dictate real operational behavior, they are your most dangerous blind spots. Failing to map them guarantees friction when integrating two different companies. This matrix plots cultural alignment against strategic capability, systematically quantifying partnership risk. While high capability and high alignment yields long-term value, severe danger lies where high capability meets low cultural alignment, guaranteeing exhausting operational conflict. For example, if a buyer organization with a flat, low hierarchy culture integrates with a highly hierarchical supplier, the result is friction. The buyer expects immediate, independent answers, while the supplier waits for localized executive approval, drastically slowing down decisions. An expectation gap opens when one organization treats a contract as the absolute final word, while their partner views it merely as the starting point for a relationship-based negotiation. If a company structured for rapid execution partners with an entity requiring broad consensus before taking action, the project faces severe implementation delays. A factory could have the most advanced robotics and lowest unit costs, but that superior operational capability cannot compensate for deep organizational disconnects. Any strategic design that fails to explicitly map and mitigate these granular differences is inherently flawed from day one. We see this theory tested constantly in global apparel supply chains, where major Western brands rely heavily on massive manufacturing centers located in emerging markets. The Western buyer typically operates on a system of decentralized decision-making, individual accountability, and strict performance-driven management. Conversely, the manufacturing environment often relies on deeply hierarchical leadership, collectivist workforce dynamics, and relationship-oriented business practices. Bridging this gap requires active strategic intervention. It begins with deliberate relationship management to build trust and foster long-term collaboration over short-term transactional gains. Brands must also establish operational transparency by openly sharing production data and exercise compliance leadership by adopting international safety standards. These actions convert a fragile sourcing contract into a durable strategic partnership. Ignoring these cultural factors triggers a predictable cascade of failures. Minor disagreements escalate into negotiation breakdowns. Suppliers slowly disengage from directives, and teams quietly resist new processes. Failing to address cultural friction inflates the total cost of ownership, cripples operational performance, and destroys the resilience of the global supply chain. An effective global commercial strategy is the precise integration of four distinct intelligence streams. First, you require market analysis to map demand and competition, followed by financial evaluation to ensure the venture creates actual economic value. Next, you need operational capability to guarantee physical delivery capacity. Finally, you must apply cultural intelligence to understand how the organizations executing the work actually function. This intelligence relies on a core master logic. You use Hofstede to define how a society conducts business, and the CAGE framework to measure the structural distance between global markets. Internally, you apply the cultural web to map actual organizational operations, and Schein's model to uncover the hidden behavioral assumptions driving decisions. This animated Venn diagram shows the final strategic insight. A global commercial enterprise only succeeds when these three forces perfectly overlap. When market logic, operational capability, and cultural compatibility align, you build resilient partnerships, stable supply chains, and a sustainable competitive advantage. Strategy defines the direction, capability provides the execution, but culture determines the behavior that ultimately decides your success.
For deeper insights into global strategy and cultural dynamics, subscribe to Infinite Business Dynamics.